Welcome to Crossroads TV, where we host China experts here on the ground in Shanghai. I run China Crossroads in-person events, hundreds of them in the last decade with these kinds of experts. We're here with Sven Agton, our co-host, the author of Adventures in China's Economy and a CEO himself. And really pleased to be welcoming Wang Dan. She's spoken 3 times for us, and all, literally, two of the record breakers. The first and third largest talk were hers, so a really great benefit to our community and me personally over the last couple years. She is chief economist at Hang Seng Bank China, and formerly of the Economist Intelligence Unit, and more importantly, probably the most influential Chinese economist voice here in China. Certainly the most cited in the foreign media, including CNBC, Wall Street Journal, Bloomberg, Al Jazeera, etc. So we're really, really lucky and happy to have her here. China's economy is always the hot topic, and I'll start off the questions. The foreign press thinks that China's economy is collapsing or underperforming. What's your view at the bank, or your personal view? Is it really happening, and what kind of nuance can you add to that?
I'll give you my personal view. Chinese economy is for sure not collapsing. Actually, if you just look at the macroeconomic figure, last year it grew by 5.2%. It was actually quite high. There is some debate about whether this data were true. If you look at the definition, it is done by production, not by income and not by expenditure. So there is clearly a discrepancy between what you can measure when you just talk about the supply side versus the demand side. And when you think about how people feel actually on the ground in China, they do feel miserable. Right. Clearly there's a gap between the macro data and a micro perception for a good reason. Because as we know, China has invested quite heavily in infrastructure, in R&D, especially in high tech, given the threat from the US. So a lot of the resources were wasted in the process of investing in those high tech. And a lot of the money were also just spent in the form of a stock building. They didn't translate into people's income. So as a result, we don't feel that people are getting richer. But at the same time, the economy is growing.
I want to ask you maybe a broader question for our mostly foreign audience. What's the real importance for China to maintain a certain growth target, going forward?
Well, it's actually quite crucial because that is the only thing. To set up a growth target is the only thing that business community can count on. And for the past 30 years, it has been this one indicator for the resources the government is willing to invest in and how individuals will plan their year ahead. For the past 3 years, China has missed once of its target. But usually, when people think about the commitment that the Chinese government make, they still tend to trust it. So when the government says this year we're going to achieve about 5% of growth, the market buy it. It doesn't matter what actually happened in the ground. They might be building a road leading to nowhere. It doesn't matter. It's going to happen, and it's going to generate jobs. So for this year, I think similar thing would happen. The government will set another quite ambitious economic target, likely still around 5%. And as a result, all levels of provincial and county and city government will react, and they will set up their own plans as well, planning on what kinds of infrastructures they build, and the companies will also make their plan accordingly. So as a result, we'll have this momentum in the economy. So it is quite different from the market-based economy in the US or in Japan, where companies are participants in the market. They react to the market demand directly. But in China, it's usually the policies lead the way. The government has to make a move first, and then people respond. It is essentially, I would say, it's more like a command economy. But within different sectors, it's almost perfect competition.
That's a really important nuance point for our audience. Speaking of politics, of course, the last 2, 3, 4 years, a lot of the foreign media have been saying that there's too much interference in the private sector here. It's dampening entrepreneurship. We won't have the animal energies that we had before, and that's why growth is slowing, in addition to, of course, COVID and the lockdowns. What's your view of how politics interferes with the economy here, if at all?
In a way, that is true, because the government picks the industries they want to develop. It's not an organic mechanism that's initiated or determined by market participants. But like I said, if you look at each individual sector, the competition is so fierce, actually the profit is driven to the bone. So the EV sector, the new material, or the consumer goods sector, just think about the profit margin those businesses make. It's usually like between 1% and 3%. And they are highly volatile as well. So the government certainly has a lot to do in this development model, because China has 31 provinces, and every province has its own agenda. So they are in those regional competition. Every government is trying to get ahead of others. So they are trying to have their emerging industries. They try to build the best industrial parks, give tax breaks, give the cheapest energy or land deals to businesses, and also try to attract foreign investments. So that has caused a loss of wasteful management, wasteful investment. But in this process, there are good companies emerging. It's just a lot more difficult, actually, for any Chinese company to stand out.
Hugely important point. I mean, we definitely have competitive markets in China among private firms. So you just mentioned all the competition between local governments. And yet you've also called China a command economy. The state's heavily involved in this economy. So, I think foreigners or people abroad maybe they don't have a really nuanced understanding how the government here works. But you can have markets. But I wouldn't quite call China capitalist, right? Because the government is definitely having an influence on where capital is allocated and how markets work.
Well, in China, it is certainly more true than any other major economies. The government decides how the resources are allocated. It's not a market. This is the reality. And about 10 years ago, the private sector played a more decisive role in what kind of industries they want to invest in. But in the last 6 to 8 years, this model started to change. The direct trigger was the China-US trade war, because there's a quite strong feeling among Chinese top officials that this threat is going to last. So China needs to pursue economic security. And as a result, they don't want capital to go into things like housing or soft technology like e-business or consumer technology. So instead, they would like all the money to be directed into semiconductors or new material or EVs. And in a way, they succeeded. And that's exactly where the capital is going. But it's not a natural mechanism in the market.
That's great, yeah.
But at the same time, as you just mentioned, for next year, they have a rather high economic growth target, basically. A lot of infrastructure work's probably still in the planning. That's exactly the old recipe where everybody says, look, this is just extending the pain, basically. So how do you view on that? I mean, they should make the shift towards a more high-tech, consumer-driven society and economy, but do exactly the old recipe again.
Yeah, that's the conundrum. Just last week, there were a few new documents coming out from the State Council. They have asked several provinces to stop some of the traditional infrastructure building, including highways, roads, high-speed railways, because China has already built too much of those. There's no new demand for them. But for local governments, if they don't initiate projects like this, they cannot create jobs. So especially for the low-skilled workers from the countryside, from lower-tier cities, from counties, and for a lot of the local government officials, they understand that they're deeply in debt, so they cannot use this model forever. But in the short term, they have so many economic targets to hit. Which ones you want to prioritize is a real difficult choice. They would usually want to prioritize employment and the local growth. So keep that in mind, that their promotion still depends on the local economic growth. So they have high incentives to push those infrastructure forward, even if they're not sustainable or they're very difficult to be completed.
Yes. You also mentioned that, that we all feel, although the economy is actually still growing in any way, whatever could be discussed, but indeed the average person on the streets feels there's no trust in the economy. Is there no trust in that the government does the right thing? Because I think also in general, there used to be clear guidelines where we're going. Now I think it's a bit all over the place for many people. They don't know exactly where to go anymore. I think that creates a lot of insecurity for them.
This is for sure the main sentiment since the beginning of last year, because with the reopening from COVID, people had high hopes and they expected much stronger policy response, which didn't happen last year. What happened instead was the crackdown in the housing sector. The government still wants to deleverage for all those real estate developers, and that has basically drained the liquidity through the banking system. And on top of that, there were more regulations introduced into the stock market, into the banking sector, and also simultaneously the anti-corruption campaign in the healthcare industry, in the financial industry. So for a lot of people, these are just bad signs about the government intention to really promote the economy, to promote growth. And for a lot of the middle class, this feeling is especially visible because their wealth has been shrinking quite dramatically in the past 2 years. One thing is, of course, the downturn in housing market, and the other thing is a semi-collapse in the stock market, and people feel much poorer after COVID. And that has got a lot of people frustrated. And also for the first time in the past 35 years, the middle class in China started to worry about their jobs. Usually the job security is quite high if you find a job in Chinese cities, but now it's no longer true. Since last year, the major industries started to lay off workers at a faster pace. And this year, I can still see that trend continue. And it has frustrated the middle class, actually scared them to a new level.
So basically, is it still fair to say that the Chinese economy still has a structural problem of overinvestment in infrastructure, plus now a psychological issue that people don't know where to go and feel insecure, that's a deadly combination? Will that eventually, combined with maybe a real estate sector under pressure, have really big influences in the Chinese economy? Or should we be optimistic about the future, put it like this?
Well, we should be optimistic about the future if we're talking about 5 to 10 years later. But if we're thinking about the economy in the next year or two, there are very few things that we can feel hopeful about. Because it is clear that this new government, let's not forget, the biggest event last year was the change in the top leadership in China. And they have this economic agenda laid out for the next 20 years. And it's about supply chain upgrade, China becoming richer, and individuals also become richer. There's this new goal about doubling its GDP comparing to the 2020 level 10 years later. And these are ambitious goals. I think there's a good chance that China can actually achieve it if the emerging industry that's related with green technology and the new industrial structure that's heavily tied with the carbon emission reduction, if that can be successful, then China has a real chance in succeeding. Its economic growth can even pick up pace rather than slowing down. But right now, it just seems that the reform has been so difficult. The top officials lack the kind of willingness to communicate about details with the general public. And when I talked to a lot of businesses last year, their biggest frustration was they didn't understand policies anymore. The predictability about the monetary policy, fiscal policy, foreign exchange policy, they're basically gone. It was not the case before COVID. I don't think COVID was the reason why it is this way. Probably the change in leadership has something to do with it, but we don't know since no one on the top is talking.
Is it then true that, as the Western press very often says, that ideology in China has taken over instead of clear economic policies?
I don't think that's that's the complete answer. Maybe there's some truth to that, but I think a more realistic explanation is that it's too difficult to explain to the general public about those new reforms they want to take. For example, the most important one, I think, is housing. Regulators and the top government officials, they were absolutely doing the right thing, but the way they do it is basically choke that industry within 1 year in 2021. They just ask all the real estate developers to deleverage, that's it.
Right.
And they were not thinking about the immediate consequence and the psychological impact onto the middle class especially. As a result, people started to lose confidence about other economic policies as well. So if we still have the housing market go on with similar momentum as it was before 2021, actually we wouldn't be in this kind of mess right now. This is policy induced. It's not cyclical.
This is the biggest question in many ways in the world right now. You know, how big will China's economy grow? How much bigger than the United States will it be? And you made a very good point. I mean, we talked about ideology, but a lot of about this regime is predictability, right? I mean, a purely market economy, you set the rules, and they stay the same. You have a rule of law, and you invest, and you allocate resources, and you can predict the future. That's not the DNA of this regime. This is a command economy, socialist DNA for this regime. So, you know, the biggest question I think going forward is, will China actually escape the middle income trap? I mean, naively, you think it's going to take South Korea's path or other Asian tigers, but with this regime, will it? We really don't know.
I don't think China faces a similar situation as what Brazil or Argentina faced 20 years ago, because they were already a welfare state. China still is not. And there's no intention on the policy side to make China a welfare state. Of course, there's a lack of protection for its workers, but when we think about some simple measures like unemployment insurance, it's essentially non-existent. If you want it, your previous employer has to write you a letter of proof that they fired you. Of course, no company wants to do that. Yeah?
Right.
As a result, very few people actually get supported if they are unemployed. And also because of that, very few Chinese people, if you ask just any random one in the street, if they have lost their job, they don't naturally just think about the government should help them. It's not in the mindset yet. So people rely on the family, rely on their savings. That's why China has the highest savings rate in the world, because they know that there is a lack of social safety net. They have to rely on themselves. So this is a very Republican way of organizing the economy. And also because of that, I don't think China can easily fall into the middle income trap. So,
but not all countries who fell in the middle income trap overspent on welfare or the people. I think, you know, the efficiency just stopped growing, and there's a bottleneck, isn't there?
Yeah, one thing I worry about the most is the private sector. Clearly now, the state-owned sector is dominating most of the strategic industries, and they're also taking over the most profitable projects in China. Of course, during this downturn, I still would say it makes sense. They are less likely to go bankrupt. A mid-size or even a large private company in China can go bankrupt easily, if the economic slowdown is too severe. So it's understandable why we have this phenomenon of retreat of the private sector. But essentially, innovation happens most in the private economy. And they also created most jobs for Chinese cities. If the current trend continues, I do feel that the government might find it very difficult to achieve the goal, even for the economic security.
Until now, we have not talked anything about trade war or technology war or anything with the US. What I hear from you is that basically what the mess, or let's say the situation China's economy is in right now, has little to do with any American policies. Is that correct?
I think it's accurate to say that the US sanction hasn't really affected the Chinese economy in a big way yet. Because its biggest trouble is still from within. But increasingly, we have noticed it's not just the foreign investors, it's also the domestic companies are trying to move some of the domestic assets overseas, individuals as well. They are doing so to prevent possible future sanctions from the US. And if we're just thinking about the decoupling in the high-tech sector, they only affected a handful of Chinese companies. The impact is very limited for the overall economic performance. But then, because people are worried, everyone in the world is worried what's going to happen to China next, since China-US relationship is beyond salvation. And they want to take some preventive steps. More buyers from abroad requires country of origin. And that means some major companies will have to move their supply chain out. And once they do that, then the whole ecosystem will follow them. They will slowly move out. And that has created already a lot of stress for some of the Chinese cities, like the cities that depend on Foxconn very much, like Shenzhen or Zhengzhou or Taiyuan. You can see the shrinking in the local labor market and the collapse in local exports. It doesn't really affect overall Chinese economy, of course, but for those governments, they depend on those companies, they depend on those employments and the tax payments. So I suspect in the future we'll see more governments having similar troubles.
But that being said, there's a lot of companies apply now the big multinationals, the China plus one or China plus two strategy, basically, where we don't want to decouple without leaving China. But 2 days ago, the German Chamber of Commerce released their business survey report, where actually German companies said 70% of German companies will invest now more in China because they feel the need to double down, actually even to keep up with their competitors in China. So that's actually exactly the opposite as leaving China.
Yeah, that's a very interesting phenomenon. For the exporting, the large export economy in Europe, they face high energy price. So for them, it's a natural choice to move their productions outside of Europe. Then you look around, where can you go? It's either Latin America, Eastern Europe, or China. Maybe Greater China area or the broader Asia area.
India.
Maybe not India. India doesn't have the infrastructure. A lot of those advanced equipment manufacturer would need. So the best place would either be move everything into China, it has a complete supply chain, or pick several locations outside of China, like Vietnam plus Indonesia plus Malaysia. So you kind of have to deal with several countries, several labor markets. It's so much easier to just move to China.
So basically, companies looking for the next China, the answer is, it's China.
Well, I have to say yes.
I think companies start to realize that by now, actually.
Yeah, companies deep down probably always know, always knew. They just still had the hope of maybe finding alternatives. It's just very costly.
So in the end of the day, the Chinese economy is still growing. There's actually lack of confidence from the people, but you're still quite hopeful, let's say, very optimistic for the mid to long-term future of the economy, and that China will make the shift in towards where they really want to go. It's just a short-term pain. Is that the overall overview, the overall, let's say, consensus about people at the moment?
I would say so, especially if you try to look beyond the pessimistic sentiment and just look at the hard data. Actually, China is doing better every single year. In terms of industrial structure, it's getting cleaner, and it's upgrading, more automated, and the labor education has been improving drastically every single year. Actually now, the people that cannot find a job in China are the highest educated people. So we're not creating enough jobs in those high-end sectors, but they are expanding quite rapidly. And even for the consumer sector, the domestic brands are rising. So people's income are not increasing, but it doesn't mean their living quality is jeopardized. Buying the same bundle of goods actually costs you less. So I think that's one reason why people in China, a lot of people in China are still content, because it's so cheap. We keep talking about deflation. I personally still cannot use the word deflation. I can say low inflation environment as economist based in China. But that means things are cheap, and there's tons of good varieties of stuff. So why not just enjoy it? So that's one reason people are not demanding structural changes as much as they should have.
Right. But deflation is dangerous. Look at Japan, because China will be the new Japan. That is also what people say, actually.
Oh, for sure, for sure. People often think about the danger of inflation, but low inflation has bigger
Right.
harm, can do bigger harm
right,
to the
right.
economy. The thing is, if the prices are not increasing, then people won't spend money on durable goods.
Yes.
And these are the real drivers for consumer markets.
Yes.
Well, we've had a pretty nuanced view, a relatively optimistic long-term view of the economy, some optimism about consumer sentiment, while admitting or acknowledging the long-term drag on growth by the governance structure here. So not all bad things go together, and I think we've benefited from your insights. I want to ask you one more question. I'm really grateful to all the times you've spoken for us, and in this time as well. And you're very generous with your time, not just with China Crossroads, but also with the global media, hundreds or thousands of appearances or quotes over the last few years. What drives you to be so vocal and with the global media?
Yeah, that's a great question, Frank.
Yeah.
So, so first of all, it's quite a fortunate time to be a China economist living in China. For any economist, you need events. I would say economists are quite useless without events.
That makes me feel good.
In that regard, I'm fortunate. And in China, it's such a strange environment, to be honest.
Yeah.
As an economist, we are one of the few groups that can still talk publicly.
Right,
So we
right.
can have our voice heard. And I think one reason that the government allows that is because economic development is still the primary goal.
Right.
They see the value of having those economists having public debate, even if it's more constrained than before.
Right.
And for me, it is quite important to have this platform to communicate not just with foreign media, but also domestic media. I mean, of course, in China, there are certain things you shouldn't say, and there's no point of saying them really in public. You know the consequence. But then there are ways that you could give out your honest opinion without criticizing. So just getting rid of all those criticism and try to find some constructive solution or constructive way of debating certain topics, I find that very useful. And for the general public, they have mood swings.
Yeah.
And it's true for the US, it's true for China. And especially in China, for the general public, they tend to buy the nationalist argument. They can be easily swayed if you just say things like, oh, Chinese economy is collapsing, or the US economy is collapsing. So if something is collapsing, they buy it. But if you become this trusting voice in the media, I think more often than not, you will find it benefiting not just yourself, your institution, but also can benefit some groups for the public. And I think that's quite useful.
You've done a great thing in all your endeavors, also for us, and you're absolutely right that the space for public debate on certain topics is closing, but luckily these topics are still allowed and also considered constructive. So thank you very much for joining us.
Thank you for having me, Frank.